Welcome everyone to a deep dive into the world of cryptocurrency and digital finance. Today we're diving into a fascinating story unfolding in the ever-evolving world of cryptocurrency, a story filled with intrigue, innovation, and potential disruption. We're focusing on the PI network. PI has attracted millions of users worldwide by offering a unique approach, letting them mine coins directly from their smartphones, making cryptocurrency accessible to a broader audience. This is all done with no expensive hardware needed. This user-friendly approach has rapidly built a massive, global community of individuals, all united by the hope that their PI coins will one day translate into real-world value. They're all eagerly anticipating the moment when their digital assets can be used in everyday transactions. The core of the project lies in its ambition to make crypto accessible to everyone, regardless of their technical expertise or financial background. It's not just for techies or the wealthy elite, it's designed for the average person. Now let's shift our focus and talk about whales. These are the crypto's power players, the individuals or entities that hold significant amounts of a particular cryptocurrency. In the vast crypto ocean, most of us are like small fish, navigating the currents and trying to make our way. But whales are those with massive holdings, substantial enough to move markets with a single well-timed trade. Their actions can have ripple effects across the entire ecosystem. When a whale decides to buy, injecting a large sum of capital into a cryptocurrency, prices can soar dramatically. Conversely, when they choose to sell off a significant portion of their holdings, prices can crash just as quickly, leaving smaller investors vulnerable. Therefore, understanding whale activity, tracking their movements, and analyzing their potential motivations is absolutely crucial for anyone looking to predict a coin's future trajectory. Currently, the PI network operates within what's called an enclosed mainnet phase. This is a crucial stage in its development. During this period, PI coins can't be traded on major cryptocurrency exchanges just yet. While you can use PI within its own ecosystem for various transactions and services, it's not easily convertible into traditional currencies or other cryptocurrencies. You can't easily cash out your PI holdings. This restriction keeps the price of PI highly speculative, as there's no official market-driven value established through open trading. However, recently, something big happened that has the PI network community buzzing with anticipation and speculation. A massive whale, a player with a substantial amount of PI, has been spotted in PI's relatively quiet waters. The actions of a single large player like this can signal a major shift in the network's dynamics or introduce new risks that every PI holder should be aware of. In this analysis, we'll break down exactly what happened, what it potentially means for the millions of PI miners around the world, and most importantly, how it could significantly impact PI's price and overall market sentiment if and when it finally hits the open market for trading. This is a story that weaves together elements of cutting-edge technology, the power of a global community, and the potential for big money moves to reshape the landscape. So let's get right into it and unravel this fascinating development. We'll explore the potential long-term impact of this whale's presence on PI's future success and stability. Is this a sign of growing confidence in the PI network's potential, or does it represent a potential threat to its core principles of decentralization and equitable distribution? Stay tuned as we carefully analyze all the potential implications of this whale sighting for every PI holder, from the casual miner to the most dedicated enthusiast. Let's dive deeper and uncover the truth behind this crypto mystery. Here's the headline: a development that has the PI network community buzzing. A single wallet has emerged, now holding an astounding amount of PI coins, approximately 290 million. This discovery has sent ripples throughout the PI network, raising questions and sparking intense debate. To put this into perspective, most users within the PI ecosystem have only accumulated a few hundred or perhaps 1,000 coins through their mining efforts. This particular wallet, however, is in a completely different league of its own, dwarfing the holdings of the vast majority of individual users. The existence of this mega wallet was uncovered by diligent community analysts, who have been meticulously monitoring the PI network's blockchain. They achieved this remarkable feat by carefully tracing and analyzing the numerous transactions recorded on the PI blockchain, piecing together the puzzle of this massive accumulation. The data suggests that the wallet hasn't simply appeared overnight. Instead, it has been systematically and steadily accumulating coins over a period of time, strongly suggesting a well-thought-out and deliberate accumulation strategy rather than a random occurrence The ultimate source of these coins remains shrouded in mystery. Could it be the result of early mining activities, insider allocations, or perhaps the backing of a powerful investment group? The possibilities are numerous. As you might expect, the PI community is currently buzzing with speculation and theories, all centered around the whale's true identity, their long-term intentions, and the potential impact on the network. What's undeniable is that this whale now controls a significant share of the total user-owned PI coins in circulation. Consequently, their future decisions and actions could have a dramatic and far-reaching impact on the entire PI network ecosystem. Indeed, the sheer scale of this holding is unprecedented within the context of PI. It fundamentally shifts the dynamic away from a decentralized community of small individual holders and moves it towards a landscape where a single, dominant player wields considerable influence. The big question is this a bullish sign signaling increased interest and investment in PI, or does it represent a potential threat to PI's core decentralized vision? Let's delve deeper and examine what this significant concentration of wealth could ultimately mean for the long-term future and overall health of the PI network. Let's clarify what a whale is in the context of cryptocurrency. The term gets thrown around a lot, but it's important to understand the true implications of these large players in the digital asset space. We're talking about individuals or entities that hold significant amounts of a particular cryptocurrency. A whale is anyone with enough coins to influence the market. There's no fixed number, it's more about the massive impact they can have. Their holdings are so substantial that their actions can ripple through the entire ecosystem, affecting prices and market sentiment. For PI, given its current market dynamics, millions of coins definitely put you in whale territory. These individuals have a considerable stake in the network's success, and their decisions carry significant weight. Whales provide liquidity to the market. By placing large buy and sell orders, they essentially make it easier for others to buy and sell their PI coins. This increased liquidity can lead to a more efficient and stable trading environment for everyone involved. But their trades, due to their sheer size, can also move prices dramatically, sometimes in unpredictable ways. This volatility can be both exciting and concerning for smaller investors. If a whale decides to dump a significant portion of their coins, prices can crash rapidly, leading to panic selling and potential losses for many. Conversely, if they initiate a large buy order, prices can spike just as quickly, creating a sudden surge in value and potentially attracting even more buyers. Because of this influence, many investors actively watch whales, tracking their transactions and analyzing their behavior for potential clues about future market movements. There's a common belief that whales may possess insider knowledge or have access to information that gives them an edge in the market. This perception, whether accurate or not, fuels the interest in whale watching. Whale accumulation, or the act of a whale steadily increasing their holdings, can often trigger a wave of buying from smaller investors who see it as a positive signal. This can create significant market momentum. However, it's crucial to remember that whales can also manipulate markets to their advantage. They might engage in tactics like dumping coins to intentionally crash prices, creating an opportunity to buy them back at a much cheaper rate, thus increasing their holdings and profits. They can also strategically set up large buy or sell walls on exchanges to artificially sway market sentiment and influence other traders' decisions. So, whales bring both a degree of liquidity and stability to the market, but they also introduce significant risks due to their potential for manipulation and influence. In PI's case, given its relatively nascent stage, a single whale or a small group of whales could potentially exert a disproportionate amount of control and shape the entire market trajectory. This concentration of power and influence challenges the fundamental decentralized ideals that underpin the cryptocurrency movement, raising questions about fairness and accessibility. Therefore, the presence of whales in the PI network, like in any cryptocurrency ecosystem, is truly a double-edged sword. On one hand, they can boost market confidence and provide much-needed liquidity. On the other hand, they introduce major risks associated with market manipulation and increased volatility. It will be fascinating to observe how this dynamic plays out for PI in the long run, and how the community navigates the challenges and opportunities presented by these large stakeholders. Let's see how this plays out for PI. What does a 290 million PI whale mean for the network? Optimists see it as a huge vote of confidence. Someone is betting big on PI's future. The whale could be positioning for the open mainnet, aiming to be a key player when trading begins. They might provide liquidity or simply hold for long-term gains, but there's a downside centralization risk. One wallet with so much power could sway governance or market prices. If PI uses coin-based voting, this whale could dominate decisions. And if they dump coins after launch, it could crash the price, hurting small holders. The whale's presence is both an opportunity and a looming risk. The fate of PI may rest in the hands of this single, unknown entity. So, what does this mean for PI's price? Right now, PI's official price is zero. Trading is limited to speculative IOUs. The whale's presence might cause short-term excitement, but real impact comes with the open mainnet. If the whale holds, supply could be tight, driving prices up at launch, but if they sell, it could cap any price rally. The whale's strategy, hold or sell, will shape PI's market. The community's actions matter too. Will most people hold or rush to sell? The ultimate price will depend on both the whale's moves and the network's strength. For now, all eyes are on the open mainnet and what happens next. The future of PI is still unwritten. To understand the whale's move, let's revisit PI's vision. Started by Stanford grads, PI aims to build the world's most inclusive crypto marketplace. Unlike Bitcoin, PI lets anyone mine coins with a tap on their phone. This has attracted tens of millions of users worldwide. The goal: create a massive user base and real utility before public trading. PI's development is phased. First distribution, then testnet, now the enclosed mainnet. Users are verifying their identities and migrating coins to the mainnet. The final step is the open mainnet, when PI can be traded on exchanges. The core team says this will happen after mass KYC and a robust app ecosystem are in place. PI's long-term value depends on real-world use, not just hype. The whale's bet is on this vision becoming reality. The next phase will test whether PI can deliver. How should PI pioneers view this whale? On the opportunity side, a whale's investment signals confidence and could attract more big players. If the whale holds, supply shrinks, possibly boosting prices at launch. A benevolent whale could stabilize the market, providing liquidity and reducing volatility. But the risks are real. Centralization threatens PI's democratic ideals. The whale could dominate governance or manipulate prices. If they dump coins, it could devastate smallholders and crash the market. The project's fate could hinge on one entity's decisions. For PI to succeed, the ecosystem must be strong enough to withstand whale moves. The community must stay vigilant and focused on real utility. The whale's presence is both a blessing and a warning. The balance of power in PI is at a crossroads. What can you do as a PI pioneer? First, manage your expectations. Don't get swept up in hype or dreams of instant riches. Remember, never risk more than you can afford to lose. Focus on fundamentals. The project's progress, real-world utility, and ecosystem growth matter most. Complete your KYC verification to secure your mined PI. Safeguard your wallet passphrase, lose it, and your coins are gone. Stay informed. Read the white paper, join discussions, and seek out independent news. Learn to spot hype versus real analysis. Understand the risks of whale-driven market swings. Make decisions based on research and your own risk tolerance. Whether you hold or sell, let it be your choice, not the crowd's. The best defense is knowledge and preparation. Stay smart, stay secure, and watch the network evolve. The story of PI and its whale is just beginning. Watch for the open mainnet launch. This will set the real market price. Track the progress of mass KYC and the growth of PI's app ecosystem. The more real-world use cases, the stronger PI's value. Monitor the whale's wallet. Are the coins held or moved? Any big movement will be major news and could signal the whale's intentions. The emergence of this whale brings both excitement and risk. It validates PI's scale but raises questions about centralization. Stay informed, analyze developments, and make rational choices. The race for PI's future is on, and it just got a lot more interesting.